Well,
All right, so I'll share my screen.
Michael,
Michael, as you
before
get
you,
ready to do that, we're going to go
I'm
ahead and
sorry.
let Ethan introduce the meeting.
You're
yeah,
right.
welcome everybody to on January 18th at 6:09 p.m. for the monthly finance committee meeting. And let's maybe just go ahead and do a roll call. So let's start with the members. So we have Doug Hewson,
Present.
Glenn Rogers,
Present.
Peter Shi,
Present.
Ethan K, present. And so today we have quorum, and maybe Doug, do I have to acknowledge also any participants as well?
Not specifically. They are here and everybody can see them on video, which is nice in this case.
Okay.
But to Kara Gallardo and of course Mary Beth Chen and our superintendent Michael Scott.
Well, perfect. Michael, maybe we just jump instead of we'll go a little bit out of order of today's agenda, but maybe we can just jump right in with after school, and maybe we can just tackle this after school discussion. So Kara, you can get off this call or sooner than later. So Michael, please.
Okay, I'll share the screen. Are you able to see it?
Yeah, we're there. Could you zoom in a little bit, Michael?
Sure.
Yeah, perfect.
Okay. So we've got a lot of revenues, $408,000. Kara, do you think this is just the amount presently that we've taken in, right? So we're halfway through the year.
So currently we've invoiced parents for 6 of the 10 total payments for the year. So we should have 4 more payments coming in for the parents. So we're like at 60% of our intake.
Thank you. And I'm sorry, I really don't know this information. Kara probably should have been speaking instead. Kara, do you want to just go ahead and talk?
Sure. So it looks like we have 213, or we've a total revenue of $408,815. Personal expenses, which is our, I guess, the total for all of the salaries and employee benefits and all of the, I guess, tax related to employing everyone, with a total expense of $235,757, which is a little bit above what our goal was, but we hired based on our initial enrollment, and we've had people dropping and moving around due to COVID or due to other things. And so I think also part of that was salaries for, I think it includes the music teacher salaries, which are covered under Orange County Music and Dance from this past semester. And then I don't know if is that included on here, Dr. Scott?
Again, this is really the first time I saw it, so.
Right.
So
then our textbooks, curriculum, office materials, supplies, and everything are a total of $23,000. And, honestly, this is the first time I've seen it too. And looking at that, I know the student meals, I'm not sure how much of that is just snacks or if we're actually also charging us for the meals that we need on campus every day for students. And then I also feel like that's very high. I think that we could get that down if we went to Costco and got snacks for ourselves. Currently, we're using a company that was contracted before I came on. And I've had parents complain about the health of the snacks. They're more like snack food. They want it to be more healthy. So, I think we could probably do that ourselves and save money there.
So Kara, that
Yes.
that $10,000 for food and student meals, is that just for after school for how many children?
That's what I'm saying. It
Sure.
seems really high. It's
Yeah,
after school program for So yeah, for 180 kids.
And that was 180 through, it looks like it's 12/31, right? So was
Mhm.
that from the start of the year until 12/31?
Yeah.
That seems high.
Doesn't that seem high? I feel like that's really high. I just am like shocked at how much that is right now. So I'm
Well-
looking at that. I'm like, I go to Costco and get a bucket of
Yeah.
like the snacks that they give us. Literally, I feel like I could go and
I can go back and confirm with Janice exactly what that means.
yeah,
Just
I'm
initial first through.
really shocked at
Oh,
that.
I'm on the call, Michael. So if there are questions related to this, I believe I can address them as well.
Yeah,
Oh.
so I guess Delano, the 4,700, the food and student meals,
Mhm.
can you help us? I get there's probably a breakdown of that. Can you help us break that down? That seems high for us.
And when you say, give me a little context. So I would first say, let me back up and sort of give you the mechanics of how this works. So
Okay.
this is coming. So the coding for this is coming directly from the school. So we're going to trust the source, right?
Right.
So
Sure.
you know, if that
Yes,
number, because
send me.
could you scroll up just a tad bit on this report, just so I can make sure it's the one that I think it, yeah, after show, perfect, right? Trust the numbers.
Mhm. So I think, so we order from this company and we order daily 25 meals for the
Mhm.
school that we have to have for the morning program on site for any students who forget their lunch. Plus we order snacks. So I don't know if they may just be coding it all towards after school
Mhm.
versus breaking it up between what is used by the morning program and the after school program.
Is there a difference in funding or program when you say before school or after school, Kara?
You know, honestly, I don't know. I just say that because I feel like my budget would be concluded for after school, and that would be on Wednesdays. So on Wednesdays, after school program includes a lunch, but every other day of the week, only for kindergarten, are we there during the lunchtime. Every other grade starts after 2:45.
Mhm. I will be
There's
happy
overlap there.
I would
So,
be happy to pull the GL on that and kind of see, you know, and then that's getting quite
Yeah.
a bit in the weeds for
Right.
this particular meeting. But if you think that there is if it's too high, because I hear you're there, so you would know. I
Right.
mean, if only 5 kids came in and you see 10,000 here, I would definitely shake too.
Right.
But we'll pull the GL. I have Janice pull the GL, and maybe that will give you a little bit more detail, because again, we don't differentiate the timing.
Right.
You know, if it's in the
Right.
morning, it's still, you know, you say after school, but it's,
I
you
know.
know, it's that program, and maybe, you know,
Yes.
after school doesn't really give it the true meaning of what it is, right?
Mhm.
So if it's before school and this is happening, then obviously it's going to get coded to the same
Right.
place because it's
Right.
coming from the same resource, right?
And I think for me, like, I don't mind sharing a budget with school, that's fine. But I just want to know if they're charging us $10,000 for snacks or if it's $10,000 for meals plus snacks. So that's a big
Mhm.
difference
Mhm.
Okay.
in the price of what we're
Let me
paying.
interrupt for a second.
Yeah.
We'll come back to that and I'll find out more information. I wanted to jump down to the net income. My hope for the program after school would be that 50% would be expensive, 50% would be net income. I didn't expect that, and that's what I hoped for. I really expected about 33%, a third, and 144,000 is the net income. That's good. That puts us in a good position. It's counting for something besides the service it gives to the parents. It's helping our school budget as well. I just wanted to point that out in particular from the whole report. Kara, great job.
What?
And Michael, Wonder Kids covers morning and after school. Is that correct?
No.
No. Okay.
Do we even have anybody in the morning, Kara?
Sai is our only full-time employee, and she does office in the morning, and then she works for the after school half of the day.
Okay. So right
So-
now, Cara, you're saying those expenses that we're seeing of the on line 4,700, that's purely for afternoon. Is that correct?
Mm-hmm.
Okay.
Mhm.
Yeah. So I think, Michael, I think Delano, I think we need to do a dig on line 4,700 and figure out what that is, because if that feels high to us, and we just need to do a dig and see whether, like, what's in there.
Right,
So
and
give
I
me-
don't know, like,
want to ask,
I'm
I
sorry.
want to ask a quick question about something you guys mentioned. So what's going on before school?
That's what I was asking. And I don't think we have anything, right?
We don't have anything before school.
There's nothing.
Currently.
What
So,
we offered was childcare. We were going to have a couple of people there for, they had to drop off early. It never materialized as a need.
Yeah, I think we didn't have interest, and then also it was overwhelming just to do the after school at that time. It's like,
okay.
can't do that.
Yeah, we can pull the GL, and I'll make sure that you and Michael get the GL.
Yeah.
And then, because that way you guys will be able to tell exactly what matches, because again, that's the source information is coming from you guys. So we'll definitely look at it, because if 10,000 is high, then we want to, it could be that some of the regular student lunches could be stuck in that number, but we'll get to the bottom of it. Okay.
Right.
All right.
Okay, quick compliment to Delano. I just asked him for this at the last minute today. And he put this together. Delano, thanks, because
Trust me,
seeing this,
that was nothing but a push of a button, my man.
it shows me more of what's happening. So I really appreciate it. Thank you.
Michael and Carrick, this is Ethan. I have a question. So with this net income of as of December 31st, and hopefully it'll continue throughout the school year, what will the proceeds of the net income be used for?
It'll be used for the salaries of the school.
So what you are saying is for any profit generated from the after school will be also used for school operations. Is that correct?
That's correct.
Is that, a question, does it affect any of the, is that part of the charter? Is that any issues with our standing with our authorizer? Just curious.
I don't think it would be.
No, it doesn't, but it has an implication. If you do a what if the after-school program was 10
Correct.
size of the daily program, then we're really not fulfilling our charter. But this is in fulfillment of the overall charter. And because we don't, quote, charge our self-rent for our after-school program, it just blends in and becomes revenue that we recognize and can apply it where we want.
And then Doug, at the end of the year, then if we have a net positive, does that roll to the following year?
Just as retained earnings for us.
Retained earnings? Okay, that's fine.
That'll be good for Athena to think about how we characterize it, but it's retained earnings.
Yeah, so there's it's a really cut and dry, and I want to walk back to something you guys mentioned here. So remember, inside the bigger program itself, there's this smaller program, which is this after school program, right? So think of it this way. Be mindful of what happens to the bottom line, right? Here's what I mean. Because essentially parents paid for the after school program, right? So this was not unrestricted dollars in that way. You have to be mindful of what you do with it. And I'm choosing my words carefully here, because I'm not saying that you can't do certain things. I'm saying being mindful of how you then reapply or reallocate those resources. Right? Make sense?
Yeah.
Delana, are you saying like it should be something that benefits both the school and the after school kind of, or it doesn't?
Without saying that indirectly, I'm going to say it this way. Be mindful that most of this rolls back into the after school program in some way, shape, or form to keep yourselves away from being overly scrutinized.
Delana, I can ask this question. Michael, has there been any thoughts, or will there be any thoughts going forward of potentially just restrict any net income being used for solely after school? Or is it one of the business plans was using the proceeds from the net income and using for the?
Yeah, originally using any extra proceeds to help support the school.
Okay.
But we've got categories: textbooks, curriculum, materials, supplies. Of course, Kara's done a great job saying, Michael, we need chess sets. We're going to have a chess club for the kids. We want to get other materials for after school. So we are supporting the after school program, but it's also giving me a little bit of breathing room to think, okay, how else can we help our families? That's the whole point.
maybe I can ask, so with the net income from the after schools, I mean, the policy procedures, obviously, we will not be spending money ahead of time, but let's assume that at the end of this fiscal year, there's a net income of $200,000. So would you say then $200,000 could be used for the next school year, or is it as an unrestricted, basically discretionary to?
We should probably
That's right.
save some for after school, only
Yeah.
because I don't want to start with zero again.
I think that's what Delano was trying to get to, right? Is
Yeah,
that
well, I think
the
what
net
so
income is-
now that I recall that this is a public meeting, I'll say it this way. It's probably best to have a concrete plan that's developed and agreed upon by the board about, because this is your first year, and I get it, a lot may not be fleshed out 100%, right? And, now that things are looking, pretty good somewhat for this particular program, make sure you hash out all the moving parts to it, come up with a decent plan of how you want to reinvest into the program, and, and check into how you, if you can, and I'm not saying that you cannot, but also check into how you can, if you can, reallocate some of those funds in other areas. It's always best to have this buttoned up in a way so it it doesn't lead to a lot of scrutiny, and if it does, you guys will have all your ducks in a row. So that's really what I'm trying to say.
No, I think that makes sense, Delano.
100% makes sense.
Yep.
Yep.
Okay, so Michael, is that all you needed Kara for at this point? We can let her go?
Delano, do you have any questions for Kara?
I do have one.
No, just that she's doing a wonderful job. I know she interacts quite a bit with Janice, and Janice always tells me wonderful things about you and what you're doing. So just so you know, she's passing that on to me, and I'll pass it back to you that I do hear.
Thank
what
you,
she says.
Delano.
Okay.
Ethan had a question, I think.
I do have a question. Something that we revisited, we talked about back in October is the treasury flow for the OCMD or any other vendors for that lack of as COVID will eventually settle down. We'll have a number of vendors on third-party, quote-unquote, third-party vendors and services. Has there been any further discussion, or do we need to continue revisiting the payment flow?
So I have been, due to our previous conversation, we decided that all money should be brought into the school primarily. So I actually have OCMD and then also a new art vendor who's teaching art classes. So we're taking in all the money for those. As to how it's being, so with the art vendor, they're charging a certain, they're charging $8 per student per class for their materials, and then also for teacher prep time outside of at their facility. And then so they're going to invoice me for that at the end of the semester. And Michael is working on the OCMD compensation.
When do you think this official transition of moving to a single payment will occur? Is it going to be this year, next year, or when do you think will happen, Kara?
Single payment for the adult, is that what you mean?
For the after school. So
After school.
Yeah, for
Any
hour.
music. So I'm not sure. I'm just kind of waiting on that because I wasn't involved in the initial contract. So I kind of just gave my thoughts about it. I'm just waiting to hear back about what the decision is for that.
And we're talking about Orange County Music and Dance?
Mhm.
Okay, and I'm waiting for their response to my last discussion.
Okay, perfect. I think that's it for after school.
Thank you guys.
All right, thanks very much for all your work. Fantastic.
Yeah.
Thank you guys.
Have a good night.
You too.
Perfect. At this point, let's get to number 1 and number 2. Budget actual financials, Delano. Anything that we need to, we received your financials this afternoon. Is there anything that you think that we need to be pay attention to? Delano, you're on mute.
Of course I am. I said a mouthful there. Sorry about that, folks. Let me grab those documents and we'll talk about the budget to actual. So I sent you a couple of different versions of, you know, the same numbers, right? There's some that are rolled up, and then you have another one that's sort of expanded out, and then you have another one that shows it by resource. We'll start with the one by resource first, and then we'll sort of go through some of these others. And then obviously over time, we'll spend a lot of our time on the, you know, especially at the board level, on that summary document, if you will, because that I like that better at that level in terms of having conversations. But here we can get a little bit in between the lines if you guys want to get a better understanding of this. And let me grab my stuff here really quick. I don't know about you guys, but it feels like Monday, and I think I have too much open. I can't find anything. It's all here though.
Right.
All right, so let's start with this one. So this is kind of the rolled up version that you guys normally see here in terms of just, you know, revenues and expenses. But we'll dive into the other reports really quickly, but just to give you guys, you know, context summary wise of where we are. So overall total revenues 2.1 million. You can see here, let me shrink this down a little bit. It's a little too big. There we go. You can see here, you know, most of our revenues are derived from one source, you know, our LCFF revenues. Biggest piece of that obviously being the local property tax piece of it, just because of city of Irvine Unified School District sits in a much more higher property tax rate wise neighborhood. And so that's the reason for most of your revenues coming from that source. Quite a bit of federal revenues. Again, all of this related to public charter schools grant. And again, the 710,000 here in local revenues, quite a bit of that, obviously the after school program, plus all the other grants and things like that. So this time around, we're going to focus right out in here, right? Because I think we understand these three elements up here, these components, right? These are pretty standard, routine. We know what they are. Down here is where all your moving parts are with your various grants that are restricted, et cetera, et cetera. So this evening we'll take a dive at this. You guys will see what's transpired since the school started, etc. Again, here we're just comparing our actuals to budget. As you can see, you know, we have 4.1 million in terms of budget. We received over just about 50% of that. On the expenditure side, total personnel expenses of 1.2 million. That's a combination of all your salaries plus your benefits here. Again, that's probably the biggest chunk of your expenditures as well, will be tied up in personnel. And you can see here, we're still trending on the budget as a result of that. The big elephant in the room, though, is this area right here. And I mentioned this back in December. I mentioned this back in November, that because of the unique nature of this program and it's in the first year nature of a program, right, that's growing so quickly. Obviously, it has lots of resources up here, right? But also related to that will be all these expenditures down here as well, because this program has well over 300 or 400 students in it, et cetera. So that investment in the first year, I expect to see this, right? Look at what we budgeted, 311,000. We've already blown through that twice over. And we're going to look at that and see where those areas are, right? But we have to, you know, again, be mindful that, you know, we're spending in this area because we have revenues and cash to sort of be able to do it, but it's not really a good thing to have, right? You know, on an ongoing basis. Again, this is your first year. It's natural to have, you know, that investment in the program, but, you know, we want to see a plan where this throttles back a little bit, sort of give, you know, some time for some of these things that are implemented to come to fruition, right? Total expenses of 2,093,000 here, and again leaves us with net income overall of 43,662. We're still on track for our year-end net income overall. All of our programs netted together are about $92,000. Again, that may change as we go along here because you guys have a boatload of, you know, what I would consider local revenues, or those restricted dollars from local sources, grants and otherwise. Let me pull up another one for you guys. As a matter of fact, I'll show you the balance sheet really quickly because I think this is most important. You can see our cash here, right? Roughly 600,000, 670,000 in cash through December. Prepaid expenses of about 13,000. Again, it says employee advances here, but this is just usually a payroll check that we wrote after payroll ran. So that's the reason why it's posted here like that. That will come off in the next month when we clear that. Looking at our total assets, 676,000. Again, most of that is just cash for a new school. That's to be expected. Liabilities, you can see here, the biggest piece of these are these, right? We have that remaining to be paid to charter schools capital as of the end of December. And then also we took on the revolving loan of 250,000 here as well. We've received roughly, I believe 150,000 of that, Michael, I think as of December.
Actually, we got the first 100 and then we got the last 150. So we
Okay,
received.
cool. So yeah, so we did get both of us. We got the last piece in December. Okay, perfect. And obviously here, this is the unearned revenue that you see here. So those are the pieces of the after school program revenues that we have not yet expensed. Because as we talked about months ago, we're mindful that, you know, there are parents who may have paid in advance, right? But we don't want to necessarily recognize all of that because, you know, it hasn't been earned yet. Some people have paid for the year, et cetera. So we still have a piece on here that that each quarter that we then true up and recognize as earned revenues. Subtract our liabilities from our total assets here leaves us with net assets of, you know, in a deficit of 39,000. Again, par for the course for first year school in month 7 or month 6. This is what I would expect to see, you know, is a deficit on your fund balance. But again, as I promised, you know, once we turn the corner and close out the year, you know, we want to make sure that this is back to positive, et cetera, et cetera. And you know, obviously that we are on course to do that. Any questions on the summary piece of this before we dive into some of the, you know, what I would consider the, you know, stress this out a little bit so you guys can see some of the detail, not necessarily the detail, but, you know, these numbers stretched out a little bit more.
Jolana, this is Ethan. I have a question. Does this
Yes.
include the after school income?
Yes.
Okay.
Yeah, the after school income would be in this local revenue line here. When I show you the other documents, you guys will see what I mean. All right, so let me grab this other one. All right, so let's do this one. This is year to date by resource. Can you guys see this now? I've switched, or is it still on the PDF?
I still see
See me now.
yes.
All right, so I'll share this one. And forgive me, I noticed we have a new member to the group. I don't know if you guys had already done introductions or not, but I just want to say hi, Peter. I'm Delano Jones. I'm the school business manager, in case you haven't figured it out by now, but I'm assuming you have, and we'll sort of catch up later, but just wanted to introduce myself.
Yep.
All right, sorry about that, folks. All right, so going back to this, so everyone can see this now, this Excel sheet.
Yes.
All right, perfect. All right, I can make it bigger if it's not big enough for everyone.
That's perfect.
All right, perfect. All right, so this one gives us all the detail that we would want, right? So this gives us a couple of things. I collapsed a few columns. So this total by all resource codes is basically summarizing everything to the right. Right now we can see all the various resources that the school has to offer, all the restricted resources. So we have the EPA, which is a small amount of your LCFF. you received 30,000. Your Title V, which is the PCSGP grant, as I mentioned, 394,000 of that you've received. This is the child nutrition program here. And again, this is that piece that I believe some students are paying into this, right, for the lunch program. This is the after school program. All right, so this is all of it here. You can see you've received 408,000. This 30,000 here was that portion that came back from Orange County Music and Dance. And then the rest of this here. And again, we sort of classified it two ways. We sort of used the names that you guys were using, the Wonder Kids. I'm not sure if that's 100% correct, but we just wanted to make sure that we carved out that piece from this here. It doesn't necessarily have to be, but we just did it just to be on the safe side. You have the Charter Schools Facilities Grant Program. This is more Wonder Kids funding. In fact, I should go over here, not here. Larry and Helen Hogue, the first grant, the first portion of that was 25,000. The K Foundation, the 140. Someone had asked about the PTO and their amount. There is the first of that commitment of 21,000, and then here's another portion of the Larry and Helen Hogue. We call it the grant 2 because the first one was 25,000, and then the second one we just classified as the second part of that grant, just so that way we can keep them separate in case there are any questions about how each one of those particular buckets were spent. So all in all here, as we go down, you can now see where any expenditures were tied to these, right? So as an example here, you can see that there were some expenditures tied to the PCSGP grant. You can see that there are some, let's go down here for the PTO as an example. Someone had asked about some of the staff that was tied to that. You can see here some expenditures for staff there. On this one from the K Foundation is about 25,000 and staff costs there as well. And feel free to stop me at any point in time if you guys have any questions or want to focus on a particular area. And again, associated benefits as a result of that. You can see here the after school program. Obviously, it's got quite a few staff members associated with that. So benefits here of about $21,000 related to that. Obviously the same here with the K Foundation, about 2,000 in benefits. Now we get down here, you can see some of the other expenditures, textbook wise, materials and supplies and where they're coming from. There's the 10,000 down there for that, 4,700 in food. You've got more Title V or the PCSGP grant, which is the bulk of your expenditures here for curriculum and otherwise, technology, etc. Looks like we have some technology purchases down here from the Larry and Helen Hogue Foundation. This one here for student supplies for the second portion of that grant. What else do we have here for PTO? It was all went to the instructional aids up there. So we come down here, we can see we have about special ed. We have another 4,000. Looks like in music equipment charged to the Hogue Foundation. You can ignore special ed because that's that's a restricted source, but that revenues comes in after the fact, so there's really not much there to see. And down here you can see the net income from each one of those sources. That's left over based on what we have, right? So as of the end of December, these were the still remaining funds for each one of these particular programs. Any questions on this particular report? Any comments? I think it kind of sums up, just about everything that you guys saw in that first summary report. Just gives you a little bit more detail in terms of, how those dollars are being spent or where they're being allocated to. If you'd like, I can put it back up. And then obviously the last one that I do have Again, it's just more or less another net income statement, just stretched out a little bit.
While you're pulling that up, Michael, the spirit of the K Family Foundation of that grant was to fund a librarian, but is anybody currently playing or acting that role in the interim as a full-time person or a new person is being hired?
We had a person, I think I'll go back to him and talk to him again, but right now she said no. So we interviewed another, he wasn't qualified. Okay, so we haven't gotten the person in the library yet. However, we did start today with Rachel Carrillo, our HR person.
Okay.
And she has jumped in, done a great job, and we're going to put her on this task as soon as she finishes a couple more and try to get some more candidates for the library.
Okay. The spirit of the K Family Foundation was not only just for a person, but anybody playing that role. So anybody playing that role of a librarian, the grant could be used to compensate. So the allocation of the grant can be used to compensate that person if it's needed. So,
and Mary Beth, maybe we should consider starting Sunny on some of the aspects of organizing the Mandarin.
We could do that.
We could talk tomorrow about that.
thank you, Michael.
Oh, I'm sorry, you guys are waiting on me, huh? All righty, so I'm showing again this same information, just sort of now showing you guys the this detail stretched out, bumped up against the budget, right? And obviously there's some areas here that it doesn't necessarily have a budget. It's small amounts that almost immaterial in a sense. But as we go down, you can kind of see here where we are in terms of our budget versus actuals and what we're spending on it. In this column is the current month. Here you can see what we're spending monthly in these areas. So you look at what it costs to operate the program just from a personnel perspective on a monthly basis. We're looking at about $236,000 in salaries and benefits every month, right? And obviously these here, depending on the the part of the year that we're in, obviously your books and supplies tend to sort of, in a normal course of a charter school or a public school or any school for that matter, the bulk of your purchases for curriculum and things like that happen at the very onset of the school year, right? So, normally you'd start to see, especially from an actual perspective in July, August, September, that's when the bulk of those purchases are made. Here was somewhat the reverse because, school started in July, but we sort of have to do this ramp up to get the resources and all that. So that's the reason why you see some of that front loaded here. But again, as I mentioned, I want to go back to this number here because we want to make sure that, you look at our budget, we've already blown the budget out of the water. Right, it's gone, right? So, but and there's really not much we can do about it because again, and I hope you guys understand when I say this, that I get the necessity of having to invest in the program, right? And obviously for next year, obviously the conversation becomes, hey, is what does next year look like in terms of student enrollment, because all those things will factor into how we budget, for student materials, curriculum, things like that, technology, those big ticket items. And I think the board saw firsthand this year what it costs just in terms of curriculum. I mean, look at that, 326,000. That's quite a bit.
So quick question
Well,
there.
question on the laptops that we ordered. Where is that line item?
So those there will be in various places depending, right? So as an example, you'll have just down on this one, and I can pull this up in Excel too. This is not very easy on the eyes in PDF, although it's a little bit cleaner. Most of your technology purchases down here, you can see them here. So you'll have technology here, have technology here as well.
But so we recently did a big purchase for laptops and iPads, right?
Right.
Michael?
Glenn, you're referring to the grant that we got, right?
That's correct. I was just curious where does that grant hit us here?
Depending on the timing here, so let's
Oh.
line this up. So
Oh,
I
that's
believe,
right. This is December. I'm sorry, Delano.
yeah,
So this just
Delano,
happened this
Let
month.
me take a stab at this first, and then you can add to it.
Yep, that's right.
The budget money is in the government. The order's been placed with the vendor, but the vendor's going to charge the government for the money.
Okay.
Delano, do you want to explain better than that?
So it's not going to hit our GL accounts?
It's going to be directly charged through the government account.
we're getting a donation then.
It's a grant, 341,000.
Yeah, but how is it that they're paying them directly?
They bill them directly. The money may come through an account still. I'm still not quite sure on that. But it's not like they're going to put money in our account and then we pay out of the account. That part I do understand.
So just from experience, there's certain federal programs that set aside money. One of those is E-rate program that provides technology for schools.
I'm familiar with that one.
That's a standard one most people know about. I don't know about this new one that we took advantage of, but I think it'll operate like that, where the vendor makes an invoice to the federal government, but we'll have to figure, how do we put those assets on our books? That'll be a fun challenge.
Yeah, it shouldn't be, it's doable. That's not a problem. I just want to make sure I understand the moving parts with, if Michael, the lady that I spoke to back in December, help me with her name.
It may be Ann Lung.
I think it was Anne.
Annie.
And she was in your office and we had talked. Yeah. So the person that actually wrote the grant on behalf of the school, right?
Right.
So once that application was submitted, I was under the impression that the school would get the funds and then we would do it. If that's not the case, then just let me know which way, is the one-way street here, and then I can work off of that with how we would be able to, because if you're going to get the computers, then obviously that's it's an in-kind donation where we can record the value of that as an asset, right, and get it on the books that way. It's not a problem, but I just need to make sure that we all understand what's happening.
Yeah, I got an email today. I'll try to forward it.
Yeah, please do, just so that way if we need to correct something before the ship comes ashore.
Yeah, it has to do with our SAM's status.
Yeah, so
is a big part of
basically,
that.
yeah, so if they're gonna make you jump through a hoop and get a SAM's number,
Which we already have.
yeah, that's kind of how the federal government operates. It's like, all right, so kind of going back to this, the question was about so obviously there's there's a lot of technology that's obviously coming to the school.
I guess I should add one thing, Delano. I apologize for interrupting. The technology committee and Brett Freeman's really the key person in this. He, Ann, and then myself have been working through getting the vendor filled and the order placed. And that's where we're at. The order is placed. They're getting ready to bill.
Okay.
But Brett's in the middle of this too.
Yeah, just send me whatever you have. And again, like I said, if it's, once we read and understand what the moving parts are, then we can address it accordingly.
Sure.
But just want to make sure that if the resources are coming, then we want to make sure that we're in a position to be prepared for you guys to act in some way. And at some point, this will all come back to the board anyways. So there'll be more discussion on it. But send me what you have. So I was
quick question, Delano.
Yes, Peter.
So going back to the 500K number, I know we'll probably jump into the details in a little bit, but is there a benchmark against other schools where we say, hey, 500K divided by 300 students, that's, $1,500-$1,600. How does that benchmark against other schools in the district? And then number two, regarding seasonality, how long do these supplies last for? And at what point do we need to replenish that bucket, so to speak?
Both great questions. The difficulty here with this school is that it's in its first year, right? So it's, there's really nothing that I could compare it against because it's such a unique program onto itself, right? Here's why I say that. From a numbers perspective, right, I could say, oh, let me just grab a school that's got 397 kids, 400 students in there. But do they have a Mandarin program that's, that looks like this, right? Do they have an after-school program that offers, all of these things? So the more nuance we get, then it changes those variables quite a bit. But the point I was making earlier, Peter, was that in your first year, obviously, if anyone has ever opened a business or operated a business of any sort, that first year is the unknown, right? You never know what's around the corner. And in this case, what I think happened is that, so the school had what I would consider multiple sources of revenues, coming in. The timing of them, they're highly restricted, and with restricted resources from federal government, it's on a reimbursement basis, right? So think of it this way: they say, well, yeah, we're going to give you $600,000, but you have to spend 600,000 technically, and then we'll reimburse you for it. So where in the world are we going to get that money, right? So to your point, it is par for the course for this size of school, right? To have, and I have clients that, depending on the year, right? It could be a year where they invest heavily in the program. They're, if you will, they're purchasing a complete new set of technology or textbooks of various types. Then you will see that uptick, but we budget for it. But in a school like this, where there's no way that we could anticipate, the needs and the type of needs that the school will have, because again, I think we walked into this saying, oh yeah, 350,000 from PCSGP would be more than enough to cover the cost of some of this, right? What we didn't know is that technology was going to cost you twice as much now, right? And things like that. Obviously the staffing for the after school program, right? I don't know, Michael, maybe you can address this more than I can. In July, did you envision the after school program in this way?
Yeah, it's a lot of part-time people. That's what I didn't think.
No, that's not my question. Is did you envision it to be the size and magnitude that it is today?
Actually, I did.
You should have told me that. Don't hold out on me like that. But Peter,
about a third
I hope
of
I'm answering your question in that way. That yes, it's good to compare. I would like to see us throttle back quite a bit. And by that I mean this. Throttling back doesn't mean that we slam on the brakes and say, hey, stop, right? We're just, we want to make sure that we are, there's a plan and a rhyme and a reason for the purchases that we make, right? And I get it. There's a need for a tremendous amount of technology, right? But do we need to get all of it this year? Right? If I were to ask the staff, they say, absolutely, yes. What are you talking about? Every kid needs, this particular thing. You and I will say, well, maybe we get half of them this year and then half next year, or, something like that. But I think at some point I let Dr. Scott sort of, he has to be able to do this in the way that the board and you guys envision this to happen. Right. And again, your authorizer, and again, I'm in touch with them quite a bit. What scared, that number doesn't scare them, right? Is if there is, what scares them is if there's no plan, right? That's the biggest piece, right? So as long as we have a plan, and I can show them, hey, look, this is par for the course. You show me a charter school that didn't, finish the year in a deficit or didn't overspend in certain areas, because if I had, if I was a palm reader, could see the future, I'd tell you we'd all be trillionaires right now. Right. But, that's, long story short there, that's, it's par for the course with the school in this first year for you to see, some overspending. But again, I want to highlight that piece of it and say, hey, board, committee, be mindful of that number, because if there isn't a rhyme or reason for us to be spending at that rate, then let's not do it. Right.
Hey, Delano, thank you, by the way, for that too. And Especially this group needs to have the narrative clear on why numbers represent what they do. And
Yes.
that's the key, because our management is decisions. We just make certain decisions. Hey, this is unrelated, but in the budgeting process for next year, does this committee need to start entertaining a pro forma for the next fiscal year at pretty soon, and then do a second cut, and then eventually the
Yes.
county?
So one of the things that we're going to talk about in February, right, is our timeline, right? So now we're going to start to get back into some of the fun things, because we're going to be looking down the road quite a bit. And Peter, there's a part of your questions that I want to come back to and answer that you asked. And I'll do that just as quickly as I finish this. So yes, in February, we'll start that budget process, because this is where, we will sort of have that top level conversation about the vision. Where are we going? Where are you guys going? Right? That's kind of the question that I would ask and challenge you guys to come back with next month. Where are you personally taking this institution, or what would you like to see? Right. And then that's the challenge to your colleagues at the board level, right? Where do you guys see the school next year? Where do you see it in 2 years, in 3 years, in 5 years, right? That's how I build my budgets, based upon your vision, right? Because it's easier to implement the board's vision when I see it, written down on paper, it's represented in numbers, et cetera, right? So short answer to your question, Doug, in February, we'll start that. The governor just released the January sort of preliminary budget. I was at a workshop today, talked about that. Just to give you an idea of how that works, the budget cycle. So now in May, once all the, taxes have been collected of various sorts, corporate, income tax, sales tax, you name it, right? All those things have been sort of projected forward a little bit. He'll release the May revise, right? That's a little bit more stronger, position in terms of where we were in January. Now we're in May. We have about 4 months more of actual data. That will be the final iteration before it goes to the legislature to be chewed out and sort of knifed up in whatever concessions they make there. But then by the end of June, or June 15th, statute wise, there must be a budget. But in between that time, here's what's going to happen. We'll get our first iteration. I'll get some feedback from you guys. Obviously, most of this will be done with the admin team, Michael and his team. We'll do that. Then we'll bring something back to the finance committee, possibly April or so. That'll be that first iteration. You guys will look at it, things like that. We'll have actuals to compare with, so that we'll now have something that we can say, hey, Peter, this is here's almost a year's worth of the school. Here's what we're looking at projection wise to finish the year, and what we think we should have budget for next year, based upon all the conversations that we would have had, right? And then obviously in this is now April, so May, we'll take that first version to the board as a preliminary budget. We're not asking for a vote, just conversation. And then in June, we'll bring it back for the final approval. And that's the budget to start the year, right? So that's the time frame for that. Peter, you mentioned timing wise. So like, as I mentioned, and this will happen for a number of years with the school, because we're sort of in that new stage, and those first 3 years or so are my benchmark years for things that happen a certain way, or I like to see them happen a certain way. Most of the purchases, again, as we build the budget, as you can see here, as we're talking about what's going to happen next year, we also have to get into the mindset of, hey, if we wait until August when school opens to start ordering, we'll get nothing. Right. So we sort of have to then, sort of work backwards. Okay, we want to start ordering in June, July at the latest. Right. So that way, come August and September, we can have that. So in the first part of the year, July, August, September, you'll see a boatload of expenditures related to classroom supplies, technology, things like that. That's when most of those expenditures will hit. And as you go into the later part of the school year, think about it. You don't want to be ordering textbooks for that year in December, right? It doesn't make sense. Half the school year is gone, right? So that means there's a huge problem within the institution if that is happening, right? Things like that. So that's why you will see that. And certain expenditures are reoccurring. Obviously, they're cyclical, right? So you'll see that, and then they'll go away, they'll flatten out. Then the next year it'll be the same thing again. And there's certain expenditures like field trips and things like that. They're more akin to the back end of the school year, in the springtime, things like that. You'll see a lot of things like that. And then certain expenditures are consistent year round, right? Things like that. So it ebbs and flows depending on the categories. I'll be happy to sit with you guys and walk through. This is a lot. If you look at the object codes on here, there's a lot going on there within the school, right? There's everything is covered, right? But I don't expect you guys, which is why I give you that summary to show you, hey, look, salaries are great, benefits, you're good, other expenditures throughout the school. But I have a boatload of reports that you guys could look at if you want to see things, presented in different formats, et cetera, et cetera. But overall, I'm pretty happy with the way that things are going, right? Is it perfect? Absolutely not. This is your first year. I don't expect anything to be perfect, right? But I do expect everyone to, to work towards, that. And that's what you guys are doing here. And that's the reason for this committee. And I certainly appreciate, you guys taking your time out to do that. Any questions on the budget to actuals here? And again, like I said, there's quite a bit, I don't expect, one thing I want to point out, so you can see here your lease expenses. I know, Michael, you brought up the fact that you guys got another Prop 39 agreement, and I did see that they did increase the rent for next year. Is that true?
No, we're adding 5 classrooms.
Okay, that's the reason.
More
for the
space.
increase. Okay, it's just more space. Okay. Again, some special ed
By the way,
expenses here.
It's not this committee, but here's the good news from this agreement with the district. It took us to May to get the agreement passed last time, the very last month. And here they're passing it now in January. They've accepted our numbers. They know we're here to stay. Year by year, it'll get even easier. But believe me, this is an amazing endorsement, indirect endorsement of what we've done.
That's great news.
Yeah, that is great news because, again, I think if you guys recall last winter, before everything, there was this adversity or this tension that kind of, when I would have conversations with them, there was, I wouldn't say it was the best, but now I think even in their simple responses back to me, you can tell that they understand that you guys are here and that you're not going anywhere. So, best to make friends,
Yep. So Ethan, is there anything else on our agenda we need to cover?
No, other than the check register, I'll just prop this up here. You guys can take a look at it. That's all that I have. If you guys don't have any questions for me. And again, feel free to reach out to me at any point in time. You guys have my contact info. And for Peter, you can always get my contact info from Michael.
So the second item just want to review is regarding personnel. There's been some inquiries regarding our TAs, other personnel related.
Is that a question for me, Ethan?
And just wanted to hear from Mike. Do you mind sharing your thoughts about personnel for the school?
Okay. The classroom aides, my goal is still the same, a classroom aide in every class. I think the board wants that, and that's what we need to work to. The PTO has been rethinking something about their classroom aide commitment, but I hope eventually they'll come back to the same answer. As far as our school, we do have one position that needs to be filled. It's always been unfilled. I've tried 3 times to do it. And I think now we have a person that will work really well. And the position is Director of Curriculum and Instruction. And it's very necessary. We don't have the science curriculum at the point it needs to be. And this director was a pre-med major at UCLA. She gets it. She also has multiple experiences with schools and budgets.
Right, so this is Kennedy, right?
Kennedy Rocker, yeah.
Right. So Ethan, have you had a chance to connect with her?
I plan to connect with her probably tomorrow, actually.
Okay, and Doug, you've talked with her, right? Doug, you're on mute.
Thank you. Yeah, I spent a couple hours as she was doing some observations, observing her interactions with children and the teachers. And then we talked maybe for about an hour together with Brett Freeman. And Brett actually extended his time an extra 20 minutes just to hear a little more about her background. So pretty fascinating person, and wow. Sized up our school very well on just a couple of visits. Obviously I had insight. So that was pretty neat to just talk, about her observations, and yet to get a very optimistic outlook for us. But boy, she told us she could, like a good doctor, she could reach out her finger and touch that place that hurts so bad.
Yeah, no, and that was my interview with her too, right? I'm like, I was pretty supportive of what she's done. And of course, going through the PCP with the teachers and her background. But I do want to make sure that she connects with Ethan and with Watson, right? Because that way that concludes the board and they'll have all their right input coming into our decision next Tuesday, right?
And she's already connected with Watson. It's just Ethan now.
Okay, that's fine.
I do have a question from a finance perspective. This is another personnel being added.
Right.
To taking out the professional development budget, is it going to be taken from other restricted funds? How do we plan to fund her compensation, Michael?
Good question. First thing to remember is she's coming in halfway through the year. So it's half the salary in essence. That hasn't been committed either up to this point. It'll be Dr. Vo will no longer be continuing in science. So that money is freed up for her to work with science.
Okay.
And also that's why I was interested in how we're doing with the after school fund, if there was positive resource there. Not that I want to spend it all. I just want to see that we have something to add to the boat. So I think for the remainder of the year, the cost to the school is about 60,000. And I see that in a lot of the resources that we have pulled together.
For the remainder.
So Delano, you concur that we have the funds to enable us to support that resource at the end of the year?
I'm just hearing about this, so I can't really say, I have to talk to Michael and see what the numbers look like as far as, is she going to be an IIA employee? Is that?
She would, I think she's 80%, right, versus 100.
Oh yeah, that's one more thing. It's 80%.
Okay, so she'll be 80% of some number.
Okay,
That's right.
right. So it feels like Michael and Delano, you have a takeaway to go make sure the financials hold. So when you bring it to the board has the ability to approve it, assuming we have all board members online with her, right?
Right.
Yes, and again, take into consideration all that I said tonight about, deficit
I get it,
spending.
where we're at. That's why I'm asking the questions, right?
Right. Yeah.
We have
Yeah. So
funds
it's
that are in one bucket and funds in another bucket. The question is, can we use funds where it makes sense to fund it? If we figure out what that, if that is in our ability to do that, right?
yes, it is within your ability to do that.
Yeah, and I think we have the money for this year for sure. But keep in mind, next year we're going to be about 25 to 30% larger, adding 160 kids to the school.
Okay. All right. Okay, so there's a takeaway, right? So Ethan, you'll connect with her, and then Delano and Michael, you'll connect to make sure we have the right budget in place to support the resource.
Yes.
Yes.
Okay. Ethan, back to you. Anything else you want to cover?
No, I think, the TAs, I know the hiring has been challenging like for any other businesses. So kudos to you, Michael, really just being innovative, really, and try not to break the budget because eventually things will normalize. So I really kudos to you, really trying to.
Yeah, I know you understand how hard it is, Ethan.
I, at this point, do not have any other further questions from everybody.
Okay. So Ethan, you need to close the call.
So I will be giving you a little, I'll give a recap on the next board meeting from my finance committee. And at this point, I motion to adjourn the meeting.
I second. All in favor? Aye.
I
Thank you,
Thanks,
Glenn.
guys. Have a great
Okay.
night. See you